Happy Monday to you. We welcome you on this July 27th. My name is James Boyd. Yes, I was out last week, and some of you already made mention in the chat. When JB is gone, the market tends to go down. I'm 4 out of 5. Okay. If I'm out, the market goes down. I don't know why I'm maybe an indicator for that. Don't want it to be that way. Like the market to go up when I leave, but that's what the streak has been lately. So you might be asking, well, when are you leaving next? I said in the chat, the week of Thanksgiving, I'll be out that week. So just letting you know in advance. Now, let's everyone do a group hug. Let's all come together, group hug. Okay, we're back. Okay, now it's great to be back with you. We got Sergey with us, GT with us. Hello, Gary. Hello, Bill Barnhof. Okay, welcome. Olga, Kevin, JP with us, Dom, and many others. Welcome. We also got Brent Morris with us in the chat. Let's go ahead and hop right in. Now, today we're going to talk about trading with technical indicators. Want to kind of also kind of intermix some of the questions that I received regarding kind of the NASDAQ, the semis, and reversals on the daily and weekly chart, and we'll talk about those things. And just know that if you have questions as we go ahead and ask. Okay. Now, just real quick, as you get started, Brent, myself, we do post educational content on X. There's my handle. Brent will post his in the chat. That way, you can click on it and follow Brent as well. Now, this session is live, but it's also recorded as well. I'll share with you that playlist in just a moment. Now, when we talk about examples, and as I talk about the information, remember the information is provided for general informational purposes only, should not be considered an individualized recommendation. You get to decide what you want to do. Also, remember that options carry a high level of risk and are not suitable for all investors. When we talk about examples, we will do those in the Paper Money software application for educational purposes. When we talk about investing involves risk, including loss of principal. So, we want the reward, but to get the reward, there is risk with that. Okay. I can't think of anything that really doesn't have risk. Okay. Relationships have risk, right? Do you want me to say anything more? Oh, some of you are like, why didn't someone tell me that ahead of time? I just did. Okay, now, a little fun there. Now, just real quick, as we get started, let's kind of break down kind of the markets. Let's start with the NASDAQ first, okay? Now, and I'll bring up the sectors in just a moment. But when we actually take a look at the NASDAQ, here's the chart. So really last week, we were kind of holding on to the 23% retracement for the most part. But then the NASDAQ, which has been the Achilles heel, drug down even further, slipped down. Now, this is what we've kind of been saying is, if the NASDAQ is going down, NASDAQ is 50% technology, okay? And one of the questions I just want to hit right off the bat is, when you look at the NASDAQ, are you looking at the NASDAQ itself, or are you looking at the big names or the holdings in the NASDAQ? Which one do you look at first? Answer, looking at the holdings, okay? What are some of the bigger names in there? Go to MarketWatch, go to MarketWatch, go to Visualize, and we're looking at the big horses. Who are the big horses? Okay, NVIDIA, Apple, Microsoft, Google, SPCX, SpaceX. Okay, we're watching the big ones. Okay, and you're going to see that not just the companies that we're watching the areas. Okay, I mean, here's the information tech, a big chunk. Some of that obviously is kind of the offshoot of communication services. So obviously, if we're talking about tech, we're talking about these two sectors right here. But what are we looking at the companies? Yes, because that's probably going to tell us what the NASDAQ is going to do. Once we actually, now, this is not something like we have to think about this, because the NASDAQ does not move itself, right? It's what's in the NASDAQ. Just like if I'm going to get a good grade at school, hey, it's the midterm. It's my final exam. I got to pay attention, okay? So if I fail the final exam, I don't need to ask the teacher what's my grade and why is it not an A, because I failed the final exam. The final exam, the midterm exam, are the big names. So of course we would be watching that. Now, James, we're only 5 minutes in and we're getting upset. No, we want to be very crystal clear on this. We're watching the big names, okay? So what's more important? Is it the NASDAQ more important, or is it Apple's more important? Google's more important? Man, if we're starting to see a bunch of these actually big names actually going down, Timber to the NASDAQ. Yeah, but I like the NASDAQ. You like the ones that are going up, typically, if you're talking about bullish. Your favorite are the ones that are trending to the upside. This is why the investor is falling in love with their own capital, not certain names. You're not married to the companies, okay? Now, if we look at the NASDAQ, we kind of typically call this growth, okay? Growth. And if you look at, let's say, growth, we know growth is not the only game in town or the only investment in town. If this is actually going down, there could be that focus in the value. There could be that focus more in income because the growth is going down. Now, it's not going down forever, probably, but right now it's kind of falling down. The money isn't just completely lost, all of it. The money tends to shift. Now, if you look at income, when I say income, think dividend, okay? If you look at income's areas, the category, when you look at the value in terms of the category, they were at brand new highs this morning, okay? So growth has still dropped, but it just dropped down further. Now, don't think that maybe those red candles are over. You got ADI, QCOM, Texas Instruments, NXPI, Intel, AMAT, AMD, Micron, SanDisk, WDC, and Seagate Technology. They're all on the list here this week to see what those earnings are. But going into the earnings, there's pessimism, okay? Now, some people will say there's fear. I mean, I don't see anyone running. I just see people selling, okay? And when there's broken support, you get stops triggering off, right? And so it just kind of becomes, now when you go up a big hill, on the other side of that big hill, there's a hill down typically, or at least some. And that's what we've kind of been doing. So I don't like that word fear, okay? It just kind of looks like there's more selling than buying. I think that's a more accurate way to say it instead of saying fear, okay? We're nowhere near the VIX of 50 or 60 or 89 like we had historically. Now, when we also take a look at, let's say, the SOX, we pull this up just real quick. The SOX, again, now, this is why we want to kind of bring up, it's probably not the main focus point that someone is going to practice doing bearish strategies. However, there are some times in the market where the market is down. And so if someone says, I want to at least maybe have 1, 2, 3 strategies bearish, that if the things do go down, they might try to target some of those areas that are going down. That might, again, not be the main focus, but at least they're equipped, okay, with education and strategy. Do you like to do that? Now, you don't have to ask me, okay? I know what my answer is, but the biggest actually thing is, are you willing to do that, okay? SOX, again, dragging down that tech space. Now, when we also look at, let's say, the SPX, the risk of the SPX is, it's top-heavy technology, okay? The SPX EW that is not top-heavy technology, this is where the difference comes in, she's holding up, okay? Matter of fact, you almost went to a brand new intraday high on the equal weight. So this goes back to the point that not everything is growth. They're actually they have been shifting. And a lot of people will say comments, well, how do you know if they're going up? Well, if one area is breaking out to brand new highs and the other areas are going down, it's a clear indication that they've shifted what they're buying. And it's not just today, it's not just Friday, it's not just Thursday, it's been for days, weeks now. Now, when we look at, let's say, the dollar sign, let me bring this up. Dollar sign, let me bring this up. That. The number of stocks, percentage of stocks, S&P 500 stocks, above their 200 period moving average. That at almost, well, if we close here, it'll be the second highest close we've actually had as of lately. The percentage of stocks above their 50 period moving average, they're almost to a brand new consolidation breakout area. Today, we actually went to a brand new high intraday. Now, I could say comments like, yeah, but I like growth. I like growth. I like growth. And we've always said the same thing. We don't fall in love with any areas. That's why we focus on 3 to 5 sectors. And we're not just looking at tech and discretionaries only. What's your favorite sector? The one that's going up, right? The one that's going up, okay? Now, if we take a look at this, let's talk about some of these other sectors here, okay? Now, if we talk about some of these other sectors like Staples, Now, Staples has not broken out, but it's kind of had a decent bounce since Friday. As the market went down, you saw another bounce on Staples off the 840. What had a stronger move a little bit is healthcare, okay? And if you look at healthcare, healthcare really actually had the old horizontal breakout, and it actually got a nice little bounce right off the 1606. Now, here's where we want to kind of make sure we're crystal clear. It's not just looking at the daily chart. It's also seeing what is the weekly chart showing. So if we looked at this chart of healthcare and we ran up and then we actually pull back and we start to see on the right-hand side green moving averages, like where? Like here, okay, like there. We're starting to see some bullish activity. Noted. But is that just on the daily chart? Well, if we go back to the weekly chart, this is where we want to kind of say, look, is this buying? Is this just on the daily chart, or do we have a green line or both green lines also on the weekly charts? Remember what I've said before is that if the weekly charts are green, you have a tailwind to your back. So if you're trying to buy on a daily chart, well, you kind of have those intermediate to longer term trends to your back. Now, let me show you a little difference here. I don't want to get off the beaten path, but let me show you this. If you look at Micron, yes, James, on the daily chart, Micron was showing that it was going up. But if you look at a lot of these tech stocks, they actually don't have green lines on moving averages. But on the daily chart, they were going up. But if you buy on the daily chart and you look on the weekly chart, that the lines are red, those bounces could be short-lived. So what's the focus? That's the weekly charts, okay? Weekly charts. And the biggest actually thing is then looking on the daily charts to see if you actually have a bounce, okay? So especially if you're trying to align, want to see weekly charts, monthlies. Now, here's the thing you got to remember is if we went back to this on MU, there were times on really the daily chart we started to show a bounce. The con is on the weekly chart, it lags. But the thing is, by at least getting one moving average to turn on the weekly chart, okay, got a chance for a bounce. Obviously, if you get two, there's been more of an uprise on the stock typically. The confirmation is not free, okay? And so there, in this case, if you say, look, that was the first week there on about probably the April 6th, and also, if you look at April 13th, that was the time we actually had both moving averages go green, but that wasn't the low of the stock. So why do people bottom fish on daily charts? Man, they're trying to get in close to the bottom. Problem is you're buying when there's murky water, okay? So that's the risk. If you do that, all eyes on the shorter term support levels over the days, okay? Now, the other thing we got to bring out is Sam is bringing up telecom. Sam, I'm so glad you actually talked about that. Because telecom is not just, I mean, you could say in a way it's Staples, okay? Do this to your spouse today, okay? Don't tell them I said this, but hide your wife's or your husband's phone. See how long it takes, okay? We know that Samsung, okay, came out with their foldable 7, maybe 8, I can't remember, okay? It gets so high. Came out the foldable phone. Apple, in September, supposed to come out with a foldable phone. It's not speculation. It's kind of news out there. You'll see it's all around. But Samsung kind of, well, they've had multiple iterations, but this recent one on the wide, okay, there's been some adoption, okay, into it, that there's an interest. Now, you got to remember is if you're buying the phone, who do you buy the phone from, okay? So into this phone cycle, Verizon actually getting a bounce. We're also seeing is AT&T getting a bounce. Yes. And T-Mobile. Okay. Now you got to remember is T-Mobile's not getting a bounce. Okay. So it's really right now VZ getting a push. Now, again, why do we bring these up? Well, these could also be underneath the umbrella of income. Okay. Dividends are not guaranteed and definitely has almost a 6% yield. The dividend is not the only component, it's the price movement, okay? Understand that. But the big thing is actually here is we come into the refresh cycle of Samsung, Apple, among other phones. Okay. You don't have to buy the phone from Verizon per se. You might do it through Apple, and Apple hit a brand new high here today. Okay. So now Zink actually says it doesn't look like he said it looks like a rotation to defense. Doesn't look like it has been. Okay. Now, when we also bring up, let's say, the real estate area, that doesn't look like a rotation. That is a rotation. You got actually technology hitting a low and real estate hitting a new high. Okay. Because it really goes back to A, live in a cardboard box, or B, get into an apartment or a condo or a house, whatever, right? So the bottom line is real estate in some cases could be a staple. I need a place to live. Okay. I need a phone, basic things like that. Now, the other thing, that's not the only form of real estate, of course. And the last one I want to make mention of is we did not mention utilities. Utilities, they've been okay, but it's really been health. It's been real estate that's led, then healthcare, then maybe utilities, and then staples. Okay. Now, are there any questions? Okay. Now, here's the deal. Yeah, you know, that's the funny thing. Okay, comment on the size of houses. I've slept in $10 million homes, $20 million homes. And you turn out the lights, they're all the same. Okay, so don't talk to me about houses. I don't have a whole lot to say. I mean, like everyone likes a decent home, but I don't know. Kind of then you got to take care of it, and then even if you pay someone to do it, you still got to take care of it. Anyway, so now let's kind of talk about some examples. When we pull up Johnson and Johnson, I want to bring this up. Now, Johnson Johnson, you got a 1 foot. If we kind of looked at this, you got 1 foot. What are they? Good question. If we go down to this and say what are they really in? And this is kind of some of how these older companies, they could be in 2 to 3 different sectors. Now, if you look at this, healthcare field, medicine, healthcare professionals, nurses, hospitals, energy devices. I mean, all kinds of stuff. Okay. You could also say, so 1 foot, you could say some of it is staple-ish type items, personal items. Okay. But you could actually say healthcare. Where do they actually have the biggest bulk of their business? Now, their numbers, this is as of 2025, they were 1103, okay, on the earnings per share. We go back to the quarterly here. If you pull this up, you're going to notice that these numbers right here for the Q2, Q1 of 26, it was still pretty high, 490. Is there cyclicality in some of those earnings? That number on the annual number, 1103, that was large considering the previous years. Now, let's pull this up for just a second. Now, if we look at kind of this pullback area, when you look at Johnson & Johnson, this stock looked like what? If we overlaid the healthcare sector, it almost looks like the healthcare sector. Horizontal breakout, pull back down to the breakout spot, and now we've just kind of bounced right back up to the prior high. Now I can hear it now. We're too late, okay? So here's the deal. Kind of your classic little touch down to the horizontal, run back up, pull back down. This is the Lisa Jack double bottom bounce. Now, if we take a look at this, here's your middle of the W, okay? There she is, right here. So this candle right there, there's your shorter term high. So when I say that is the middle of the W, we fall back down. W has 2 V's, of course. Go back down, run back up, fall back down. There's your second V of the W, and then run back up. It was the date of July 23rd. There's your short-term high. Now, what's interesting is the size of the candle going up to the prior high. Prior high sitting here at 269. Now, the nice thing about the stock market is the investor does not have to load all their capital into one entry. That's kind of the nice part. Dollar cost averaging, tactical investing, things like that. So if we look at this, we might say this has gone up 1, 2, 3, 4, 5. We always have said, look, if you get a shorter term bull flag, you can a lot of times kind of get this maybe 5 to 7 day bullish move to the upside, represented by green candles. And if the stock pulls back, it might pull back maybe to the first or second fib down. Now, what we're going to do in trade example number one is we're going to buy the shares of the stock, but we're not going to do the full position. We're only going to buy half. And then what we're going to do is do a limit order or an alert at 263. That way, if it does pull back, trying to leave some capital, cash, to buy the second lot, if you will, of shares. Now, what I'm also going to do is I'm going to take the 10-period moving average and use that as the potential support. Now, let me do this in the paper money account so we can actually track it along. Johnson & Johnson. Now, we're going to do this fast because we can. Number one, we're going to right-click on the shares on the chart, right-click, buy custom, and I'm going to go with OCO bracket. Now, when we do this, again, let's imagine that we said, look, we normally buy $7,500, well, in this account, $5,800 at the most. We're going to do $2,900, just half, okay? $2,900. $2,900 worth is going to be 10 shares, $268 stock. And what I'm going to do is set the stop underneath the 10-period moving average. Now, let me redraw this just to see how close this is, okay? Now, if I were to redraw that, drawing from where this move started, want to make sure that we're probably not too close. So if I looked at this, I'm going to set it below the 38%. That's at 260.20, okay? Less 2%. And we're going to set the stop at 254.99, okay? 254.99. Dated GTC, dated GTC. Now, we don't have a target yet. Now, what I want to do is I want to flip this, okay? If we went from here down to there, we're seeing where could that extension be? Well, that extension, if we look at this, is really 281 and looking at a 290. Now, I'm going to put it at, let's say, the 281 initially, but you might say, James, I like that second fib, that 200%. The 200% is not a Fibonacci. It's the channel width extended on top of the resistance. So you can put the 290. I'm going to put 281 initially, okay? Now, if we look at this, now what I'm going to do is go limit GTC there, stop GTC. Okay, there it is, confirm send. Now what I'm going to do is I'm going to set the alert just for time's sake, where, okay, that actually fills. I'm going to take the target off for just a sec. Let me just hide that. Well, let me delete it, okay? Clear that drawing set. Now what I'm going to do is if I went down and say, I'm going to put an entry or a target or an alert, I should say, right at today's open price. If we go down to today's open price closer to the moving average, that might not be the baddest maybe entry the investor might look at to maybe try to buy off that potential moving average level. Now that doesn't guarantee the stock's going to stop going down, okay? But the investor's saying, look, I'm going to try to get in a little bit closer to maybe where it might be pulling back in the flag. The reason why he keeps talking about this flag is if you go back and look at previous bull flag pulls, usually 5 to 7 days, typically. They don't all have to be green candles. If there are red candles, there tends to be 1 or 2 red candles of the 5 or 7 days, okay? Right now, we don't even have a red candle, per se, of this recent run. We just had green candles lately. So we're just saying, look, if we pull back, we have some capital that we could try to put to work. Now, let's also go back to just real quick. So trade number one, Johnson & Johnson. Now, the comment says, isn't 269.43 a resistance for Johnson & Johnson? So here's the thing. If a stock goes to a high, is a higher resistance. It's potential resistance, right? We don't know if it's resistance. If we go up to a high today, is a resistance. Think that through. As it swings back up to the prior high, like we've actually done, well, we're thinking that you have a prior high. It's a potential resistance, okay? But what the investor in this case is doing is saying, look, I think this is potential resistance. It's probably not going to become resistance. and we might try to extend higher. So in other words, if we draw this out on the chart to kind of walk through kind of the mental thought of this with a picture, we have a prior high, we get a pullback, right? And all of a sudden we start going back to the upside. And this is what the investor says. Well, I'm not going to get back in until we get above the prior high. Well, we get above the prior high. Now the investor says, guess what? Oh, we're too late. Now I'm going to wait for a pullback. Well, this is what's so awkward is the investor is always in the game of waiting. That's how it feels. So first off, if the stock made a high and that stock is actually pulling back, the investor that has an understanding of how a trend works, they're not thinking this is bad. They're thinking, come on down. The price could be right, closer to support. The red candles above the moving averages, come on down, okay? Because they know that in these trends, when they get the red candles, it's just dropping down close to support. Technically, fundamentally, it's becoming more attractive, okay? Now, if we start to go back to the upside like we did here, there, and here, we're thinking in this case, not probably the resistance. It could be trying to make another higher high, okay? Now, time is going to find out. When we think of resistance, we're thinking about something where we've had kind of like what we call a double top pattern, Michigan, okay? Or something where it's actually at triple tops. We don't have that on the chart right now. All we have is we ran up, made a high, pulled back, and now we're swinging back to that prior high, okay? It's not an M yet, okay? And even if we did pull back for 1 or 2 days, that's probably not going to be maybe the end, okay? That could be just that flag that we're looking for, and we're seeing if it can continue. Noticing we're targeting the areas, sector-wise, that are bullish. We're not buying tech here, okay? And I'm talking about semiconductors, okay? Now, just want to answer that question. All right, now, okay, here we go. Let's actually go back to another area. Now, I want to flash a couple stocks. I want you to kind of keep an eye on also a couple areas as well. So first off, Coca-Cola. Now, Coca-Cola has not ripped the ceiling off, but it's also kind of held in there and been grinding, okay? Speaking of staples. The other area that I want us to kind of keep an eye on, some of these financials, they have not done that bad, okay? Visa, I mean, this goes back to, I don't care if you use your debit card, your credit card. The bottom line is making a little slice of pie, okay, off each one of those transactions, okay? Visa, pushing to the upside. MasterCard, okay? Travelers, doink. Oh, I've been waiting to say that all week. American Express, which is the one that actually has the highest, well, I mean, if you look at Visa, MasterCard, and compare it to the fees of American Express before earnings fell down on the earnings. Visa, okay, think Sam's Club, okay, think MasterCard, okay, at Costco, things like that. Why do they go with these firms? They don't have the higher fee, okay? So now if you actually take a look at this, those are the ones that are still getting pushed. Now, I'm going to also bring up, just real quick, Wells Fargo. Now, Wells Fargo has not broken through the resistance. Not yet, okay? But when you look at the, let's say the IXM, the financials, that financial space, that's done stronger than we thought, okay? When we look at the financial sector, okay, and let's bring back up WFC now. This right here, the reason why we're going to keep an eye on this is kind of right at your horizontal area of resistance. And there's been more touches here, noted. If someone said, this is what and the reason why I'm bringing this up is when you talk about resistance, there's been more touches. And when I say touches, there, here, all through there, lots of touches here. Now, if someone says, I see more resistance, I'm not just going to buy the shares here. You might just do a buy stop limit, and or an alert. Buy stop limit. You're actually putting in an order to get in. The alert is just an alert. Okay. Now what I'm going to do is I'm going to right click on this and I'm going to say create an alert. If we say create an alert, we're saying, look, if we get at or above wherever you think the resistance is, I'm going to say 88.60. The reason why we're keeping an eye on this is if we start getting, let's say, at or above 88.60, this could really be your channel trade. Your channel trade is when it gets above the resistance, which is really the bottom of the support level of the previous channel, and it tries to go up to the next level. Okay, so keep an eye on that. Okay, if we could do a buy stop, but I'm just kind of trying to answer the question that was in the chat as well. If someone says I don't want to buy it, this is more of a resistance than we saw in Johnson & Johnson. Okay, so now let's actually go into some of these others. Let's go back into, let's say, speaking of some of these others, I want to actually get Travelers for just a second, okay? Now, if we take a look at this, when we look at, let's say, some of these stocks that kind of have resistance, and let's go back to this channel trade idea. Now, when I looked at when I was gone, I was still watching the market. I don't, just because I'm not here in the office doesn't mean I'm not looking at the market. And some of these stocks, now what we do know is that people like a good vacation, okay? I think Americans, they always like a good vacation, okay? Now, if we take a look at Expedia, here we actually have a piercing into the old channel. Now, when's the earnings? The earnings is on 8/5, okay? So what? Next week sometime. Next Wednesday, Thursday. And what I'm going to do is on this one is I'm going to right click on this one. Now in the current market, there's a number of stocks that are trying to break inside this old channel. You'll notice even a stock like Salesforce that's been beaten down that are breaking inside this old channel. Now wait, hold on. Don't jump to any conclusions. Let's go back to the weekly chart and let's just double check and see what we have. Okay. Now I'm feeling a little, just want to make sure, okay? So when we look at the weekly charts, what do you notice? Well, the weekly charts are still showing green lines on the moving averages. We see a little run to the upside, okay? A little run to the upside, yank back, and this is kind of your classic. Now, this candle right there that I put in the X underneath, that's the candle from this week. So this candle so far is only 1 day. So you got to recognize that. Now, that green dot right there is close above the high of the low week. Okay, now, if we take a look at that, so on the weekly chart, that's what we're showing. On the daily chart, this is what we're seeing. Now, what I'm going to do is I'm going to take another half position, buy custom with OCO bracket. Now, what I'm going to do is on that, let's go back to the paper money so we can put that in. That's going to be EXPE. Right click on that chart. Let me put those lines back. Buy custom with OCO bracket. Let me draw those lines back in the paper money there. There. Now, again, we have about a week and change. Okay. I'm going to put the target right here at 302.57. I'll put it a little bit less. Okay, 302, stop underneath. I'm going to put it underneath the moving average from probably about Friday, 263.62. Stop for just a second, 258.34. So 258.34. Dated GTC, right there. Now, again, capital size on this, we did that. Well, let me widen this out for just a second and take it to about another 2,900, about a half position. Now, the whole idea is when we get these big green candles, we talked about this about 2 weeks ago. If we come down to the middle of that, I'm going to right click near the breakout area. I'm going to say create an alert, not at or above because it would alert immediately. At or below, create. So if tomorrow or the very next day we get a little dip in the morning, maybe middle of the day, etc., just in general, I'm going to try to add to the position, okay? Now, if you notice this, target, stop, confirm, send. Now, in this example, we're going to try to hold over earnings, okay? The risk with earnings, we don't know what the earnings is going to be. Second, we don't know what the reaction of the investors is going to be. Given, though, it's still a half position. Now, remember, if you're going in, like this week, you got Apple, many of these stocks, Amazon, etc. No one has to buy only stocks. They might buy the sector. They might buy the market in general. They might buy the industry groups or consider it. Buying individual stocks, you're really putting it all in on the individual company. Now, if you get the trend right, it could be amazing. Get the trend wrong, it could be amazingly bad. Okay, so why do people do that? They're trying to actually get that amazingly good or great. Okay, that's the goal. Now we're going to send that position, and it's there. Trade number 2, Expedia. Now let's actually go back to this. Now the one thing I want to say just real quick, when we think Expedia, think about example given. That's not the only company in town. Booking. Okay. So if you look at Booking, you're thinking if Expedia goes up, maybe Booking goes up. Booking is also trying to get a push. And also think about Marriott, think about Hilton. Look, it's a whole chain of them. Avis, Thrifty, the whole 9 yards. Okay. Hertz. Okay. And when you also think about, let's say, some of these companies, how do you get there? Delta, United Airlines, right? JetBlue, Love, all of them. They're all in there. Okay. So right now they've had a pullback with crude oil going up. Well, that's been an interesting dynamic, right? Go long energy, bearish actually airlines. Oil goes down, airlines pop back up. It's kind of a classic little long short. Okay. Now, the question was, let's go to some of these. Let me just bring up Merck first. Okay. Now, Merck is a Dow name. Here we're talking about healthcare, okay? We talked about Johnson & Johnson. Johnson & Johnson's not the only one. No one said you had to buy an individual name. You might say, I'm going to buy an industry group. Consider it. You might buy the sector, okay? If you look at, let's say, Merck, that's not the only one, okay? In the chat, what you'll notice is now let me just do this, S&P 500. I'm on Market Watch, Visualize, and I'm going to go down to healthcare. There. Now, if I look at healthcare, what areas of healthcare? Okay. What areas? Now, one of them that you've made mention of is biotech, and the ticker that was in the chat was AbbVie. Okay. If we bring up AbbVie for just a moment, it is also right at that area of resistance. Now, why did you say this was resistance now? Well, notice the nuance. So number one is you did have a prior high. Okay, there's the prior high there. Okay, and it fell. So notice right there, that's different than what we saw in Johnson. Could Johnson do something like this? It could, okay? And now what you notice is, here we are again. So we've had 2 touches. Now, if you ask me, when are you more apt to call this resistance? When these are about 2 weeks apart, okay, 2 weeks. If we have actually 2 tops that are 2 weeks apart, that's probably more your idea of what resistance is or could be, okay? 2 weeks, not 2 days, not 2 hours, okay, 2 weeks. But if you look at this 3rd top, but the moral of the story still is, you have really a higher low, you have another higher low, and there it is, okay? Now, is AbbVie bearish? No, we wouldn't say it's bearish, but it's actually kind of trying to break out and actually squeeze higher. Now, Gary actually says, now, maybe the market people are listening to us. So Gary Taylor would like AbbVie to go up. He said, please. Okay, there, Gary, we did it. Okay, now let's go back to Merck just real quick. Now, if we pull up, let's say Merck, okay, you're going to see that on Merck, that's the one. They all have earnings this week, okay? Most of them do, not all, but most of them actually do. Now, if we pull this up, Merck is also the one that's cut. Sorry about that. Let me clear, take that off. Okay, there it is. Now, Merck has a little bit more runway room, time-wise, to earnings. Merck is also a little bit ahead of AbbVie in terms of where it is. It got above its prior high. Now, if we look at, let's say, Merck just for a second, gosh, so much to talk about, so little time. We're going to show an example of buying, again, a half position, okay? Now, does every trade have to have a target on it? No. Okay. Why is that? You might just want to try to be long positions that you might want to try to own the trend of on the daily, weekly charts, etc. You might also try to do positions like option strategies where you're trying to make income off them, off selling cover calls, things like that. You're also trying to get exposure to the space of companies that are actually maybe some of the leaders of that space. Now, underneath, what I'm going to do is I'm going to set the stop underneath the 20-period moving average. Why a little lower? Because there's earnings upcoming. If we take a look at that, if we did that, 125.38. Now, James, that's the second healthcare stock you did. That's true. Guilty. Okay. 125.38. Okay. Now, if we did this, I'm going to go back to that 2,900-ish, which is about a half position. It's going to be about 22 shares of stock. Confirm send. Now, remember how the stop works. If we go to that price or less, it triggers it to be sold. The con, we don't know what the price is going to be. That's what a stop is. If you do not like that, you might say, well, what other options are there? When you buy a put, you have a right to sell at the strike price for a period of time until expiration. That's another option. It's not the only way, okay, to try to manage risk. Position size is a way to manage risk as well. So we're trying to do kind of maybe all of them. Now, notice we're going to send that order sitting right there. Now, I want to go back to just real quick a staple. Now, we talked about Verizon actually getting a little push to the upside. And if we also look at, let's say, PM, I want to go back to this for just a second in the 60 seconds we have, 90 seconds. PM, now this is not the first time. If you actually have kind of stressful events in the market, people say investors tend to go back to vice names like cigarette stocks, like alcohol, things like that, spirits, whatever you want to call it, okay, minerals, whatever. If we take a look at this, here you actually kind of have a continuation. Now, the last trade, okay, trade number 4, we're going to right click on PM, buy custom with stop. Now, what I'm going to do here is, now wait, hold on. What area is this in? It's in staples. If we took a look at this, now some of you might be amazed by that. How is it in staples? Well, that's just how it's labeled, okay? You're going to notice right here that earnings per share was 726. Revenue was actually 2609 at the full year of 25. What's interesting about this is when you take a look at the pattern, really your classic continuation. Now, for time's sake, what I'm going to do is I'm going to set the stop right underneath this last low we actually had, 190.55. Now, notice that our examples are not technology. What's the favorite sector? The ones that are going up. If growth is actually getting pushed down, we're trying to go to the areas that might rebuff the downward movement in the other areas. The risk is the more the NASDAQ actually could drop, could it affect some of these areas? It could. Okay, it could. But if we continue to see that rotation, these areas might hold up better. That's the idea. We're also taking this from a standpoint that not all investors are going to be bearish investors. They're trying to buy things that could appreciate, but they're also time-proven businesses, okay? These are not brand new startups. These are companies that usually are oligopolies, monopolies, and if if the group wins the companies that we're looking at, they might be able to benefit. Now, from that, thinking that the equity, the shares, might appreciate. All right, now I'm out of my time here. We did 4 trade examples here today, focusing a little bit more on healthcare and staples. Yeah, Bill, that was for you. All right. Now, first of all, it's great to be back with you. Thanks to Brent, and thanks to all of you as well. Also want to kind of quickly make mention is I'll be in throughout the week, and I don't go on vacation until Thanksgiving. Just want to get that out there. Now, also with that said, now remember with what we talked about here today, it was done for example, illustrative purposes only. We got a class coming up on covered calls and cash secured puts next. So stay tuned for that. If you have not subscribed to this Trader Talks channel, do so. It's free. And also remember that you can follow us throughout the week on our other classes and topics. So again, I'll be in all throughout the week and look forward to each session with you. And I'll post that link in the chat of the calendar of events for this week as well. Stay tuned for our next session coming up next. Take care. Bye-bye.